There's no investment is without risks, and Meta faces several significant headwinds we need to consider. Let's look into some of the challenges Meta faces. Recent development has significantly changed the landscape for Meta. First, the regulatory environment has intensified dramatically. Just 2 weeks ago, on August 15, 2025, the Supreme Court declined to hear Meta's appeal in the FTC case, effectively upholding the 5 billion privacy penalty and opening the door to even stricter oversight. This wasn't just past violation. The court decision enabled the FTC to impose new restrictions on Meta's data practices moving forward. The FTC announced that they're expanding their investigation into Meta's AI training practices, specifically whether they're using data center without proper consent to train their Llama 4 models. This part of a broader trend. The EU just finalized enforcement guidelines under Digital Markets Act last week that could limit how Meta monetizes personal data across Europe, potentially affecting 20% of their revenue. Second, privacy changes have evolved beyond just Apple's iOS updates. Google's privacy sandbox has now fully rolled out across Chrome, affecting 65% of the internet users worldwide. And early data shows it's costing Meta an additional $2.3 billion in quarterly revenue. That's on top of $4.1 billion that they already lost from Apple's changes. What's particularly concerning is that these privacy changes are becoming more sophisticated. New browser features can now detect and block the most advanced tracking techniques Meta has developed. Just this month, Mozilla announced Firefox will implement even stricter anti-tracking measures by Q1 2026 that could further erode Meta's targeting capabilities. Third, the scale of Meta's AI investment has reached staggering levels. Their Q2 2025 earnings call revealed they are now spending $21.4 billion on capital expenditures. That's this quarter alone. That's more than the entire market cap of companies like Coca-Cola or Nike. For context, they are spending approximately $248 million per day on AI infrastructure. While this is building tremendous capability, the returns are immediate. The AI initiatives generated only $8.7 billion in incremental revenue this quarter, meaning they are still operating at a significant loss on these investments. The competitive pressure is intense too. Just yesterday, Microsoft announced a $100 billion partnership with NVIDIA to build the AI infrastructure, putting pressure on Meta to keep pace. The fourth thing is about Reality Labs, which is continues